Welcome everyone to today's Explainer. Today we're unpacking a really fascinating situation. A real tug-of-war happening right now with a company called Veeco Instruments. It's a classic case of short-term numbers battling against massive long-term industry shifts. So let's dive into the Veeco paradox, their Q1 2026 earnings versus some absolute massive AI tailwinds.
Okay, let's just dive right into this. 0.14 cents. Yep, that is Veeco's tiny Q1 2026 earnings per share. Now, on paper, that looks like a really tough quarter, right? And it was largely driven by a noticeable slump in sales from China, which has been a major headwind for them lately. But this sets up a real mystery. With earnings this microscopic and obvious geographic headwinds, why on earth might this stock's future actually be looking incredibly bright?
Well, to figure that out, we're going to follow this roadmap today. Number 1, the Q1 2026 reality. 2, the AI tailwinds. 3, the Axcelis merger. 4, insider sentiment. And finally, 5, analyst divergence.
All right, kicking things off with Section 1, the Q1 2026 financial reality. So, looking at the raw data right from Veeco's latest SEC filings for the first 3 months of 2026, it's definitely a mixed bag. As we saw, earnings per share came in at that razor-thin 0.14 cents, fighting that headwind of falling sales in China. But, and this is a big but, Veeco still managed to post a really solid $158 million in revenue and a $9 million non-GAAP operating income. So the business is still generating substantial top-line cash, even while they're navigating a pretty complicated global trade environment. So the absolutely crucial point here is this. If things look, kind of anemic on paper right now, why is Veeco's leadership acting so incredibly confident? Why are they officially reiterating their full-year 2026 guidance and even going out on a limb to claim increased visibility and optimism all the way into 2027? It's just a huge disconnect between today's spreadsheet and tomorrow's forecast.
Which brings us to Section 2, AI infrastructure tailwinds.
Now, what's really interesting is Veeco's LSA 101 laser spike annealing system. I mean, this isn't just some giant metal box. It's literally the physical backbone of the AI revolution. When we talk about AI, we almost always just think about software, right? But that software requires incredibly dense, high-performance hardware. Veeco's highly specialized technology actually enables the manufacturing of advanced semiconductor architectures, stuff like gate-all-around transistors and high-bandwidth memory. Basically, without machines like this one, the chips that power today's AI models just simply cannot be built.
And if we look at the total served available market, you can really see the financial scale of this technological need. We're looking at a projected $800 million market for their annealing systems, a $600 million market for advanced packaging, which, by the way, is huge right now as chiplets become the industry standard, and a $120 million market for ion beam deposition. These are massive, rapidly expanding pools of capital that Veeco is uniquely positioned to capture as global infrastructure just continues to upgrade.
But here's perhaps the biggest hidden gem in their recent earnings presentation. Management highlighted a stronger-than-expected revenue opportunity, specifically in indium phosphide, or NP, laser manufacturing. Because of the absolute massive data transfer needs of modern AI data centers, Veeco now projects a cumulative total market opportunity of roughly $2 billion in NP lasers alone over the next several years. $2 billion! That is a colossal pipeline directly tied to the global AI build-out.
All right, moving on to Section 3, the Axcelis merger factor.
So in their official SEC filings, Veeco explicitly includes safe harbor statements regarding, and I'll quote this directly, statements regarding the pending merger with Axcelis, the timing, completion, and expected benefits of the proposed transaction. Now, throughout this explainer, we want to look at this totally neutrally. This pending merger activity is a classic double-edged sword. On one hand, it injects a massive potential growth catalyst and operational synergies into the stock. But on the other hand, as we all know, pending mergers always carry regulatory and execution uncertainty until the deal actually closes, right? So it's a huge variable for the market to have to price in.
Next up is Section 4, Insider Trading and Sentiment.
So how are the people actually running the company placing their bets? Well, to find out, we look at SEC Form 4 filings. These documents track exactly when directors and officers buy or sell shares of their own company. And in the special industry machinery sector, insider conviction is a really powerful signal. When we see high conviction buying from management, it strongly suggests that they believe the current market price significantly undervalues their future growth prospects. Basically, it tells us that internally, leadership truly believes these multi-billion-dollar AI tailwinds will absolutely outpace the temporary headwinds they're seeing in places like China.
But management's optimism is just one side of the coin, isn't it? The vital question for any observer is, how is Wall Street reacting to this tug of war? Are the external, institutional investors buying into this AI-driven future, or are they getting totally spooked by the Q1 stumbles?
Let's find out in Section 5, Diverging Analyst Forecasts. Just consider the incredible spread in analyst targets right now. It's wild. On the bullish side, Citigroup just boosted their price target to $60 with a solid buy rating. Barclays also boosted their target to $55. They're clearly looking at those AI infrastructure tailwinds. But then, if you look further down, Weiss Ratings actually downgraded the stock to a sell, and Goldman Sachs lowered their target to $20 with a neutral rating. That is a massive $40 gap between the bulls and the bears, and they are all looking at the exact same earnings report.
Ultimately, Veeco CEO Dr. Bill Miller has planted his flag firmly in the ground. Despite the immediate Q1 bumps on the road, the official corporate stance is to reiterate FY 2026 guide with increased visibility into 2027. Leadership is seeing an acceleration in order activity that started in the back half of 2025 and is carrying right through to today. They remain highly confident that the long-term structural demand for their technology is completely intact.
So we are left at a really fascinating crossroads. Will Veeco's position as a critical enabler of the AI manufacturing boom ultimately overpower its current geographic sales slumps and merger uncertainties? Or is the extreme caution shown by some of Wall Street's biggest players ultimately justified? It's a high-stakes puzzle in the semiconductor space for sure. I hope this explainer has given you the structural roadmap you need to follow along as the whole thing unfolds. Thanks for joining me today, and I'll catch you on the next one.